go through the presentation, especially on like Hikanashi candles and things. Just put them in there and I'll try to answer them as the presentation moves on. If I can't answer them or there's something that I don't know that you have to talk to somebody at Brightline about, just put your name and phone number in the username in the chat box or the question box, or your Skype username. And Rory will call you, and Rory will from Brightline will call you and answer any questions that you might have that I can't answer. I think most of them I can answer, but we'll just keep that in mind. All right, and important to understand that I'm a professional trader. I'm not a professional presenter. I'm not a professional marketer. So I know if you've seen a lot of webinars that are fairly slick with lots of Ferraris and nice big houses and crazy returns on which you can make. That's not me. I'm just a consistently profitable trader, making really good money at doing this, and I think you'll find out that you can do the same thing given some effort. Obviously, you have to take some effort. Okay, so let's move ahead here. Excuse me while I sneeze just a second. All right, allergies kicking up here. All right, so this is just a graphic on SPY Super System software. It tracks. We do track institutional money flow. That's the key here, is to be able to know what the institutions are doing and how to find that. And the software does it for us. This is what it looks like on Thinkorswim, but I'll show you some actual charts here in just a little bit. We also have a text alert service where we send out the highest probability trade alerts on text. They come right to your phone. I'm on the alert service, so I can tell how long these alerts are taking to get from the time I send them out. Right now, for me, it's somewhere around the neighborhood about 10 seconds. They get to my phone. All right, so these are, you don't have to be on your computer or anything to get these text alerts. You can take and put the trades in. Again, remember, you don't have to trade on Thinkorswim. You can trade on any platform that you want. I trade on Tradier, but you can trade on Thinkorswim, Tastyworks, whatever happens to be your interactive brokers, whatever happens to be your platform of choice, you can trade on that one. But you get your information from the SPY Super System on Thinkorswim. All right, so first thing I'm going to cover, and I cover this on every webinar, and so if you've heard my webinars before, this is going to seem redundant, but this is really important because this is something that most traders don't really understand. We're retail traders. We're these little marbles here. Right? So this is millions and millions and millions of retail traders, and the big marble here is the institutions. Now, when you're in a trade, if just the retail traders are in the trade for the most part, I mean, the institutions can be in there, but they're not in there with any kind of force or any kind of direction. When you're just trading against other retail traders, what you're getting is a lot of chop, a lot of chaos in the market, just a lot of up and down, market just not going anywhere, and you make a little, you lose a little, you make a little, you just basically spinning your wheels trying to make any money when the institutions aren't in the trade. Now, the institutions are what drives the market, and the institutions are made up of investment banks. Biggest part of them is probably investment banks: Goldman Sachs, J.P. Morgan, Morgan Stanley, all of the big investment banks. And the big investment banks have billions and billions of dollars to invest and to trade. And they have a couple ways they do this. They have a trade desk where they actually have humans putting trades into the market, clicking their mouse just like we do. But that's tiny portion of their business. Most of the trades that institutions take come from algos, basically algorithms or computer programs that they write to identify specific conditions in the market, or they identify news. They actually optically read news, and they trade off of that. And those things are extremely quick. Right, so this is what we want to know about when the institutions are pushing into a trade in force. I mean, there has to be some consistency across multiple institutions that are pushing a market, but that's what we want to see. Now, additionally to the investment banks, there's hundreds of hedge funds. Hedge funds are also considered institutions. They trade the same way. They have algos, just like the big banks do. And then you have pension funds. Pension funds are police pension funds, state worker pension funds, fireman pension funds, lots and lots of pension funds, more billions of dollars to invest in the market and trade in the market. And the last one would be mutual funds. T. Rowe Price, Vanguard, all the big mutual funds. Again, billions and billions of dollars. So this is what drives the market. And our job as retail traders is to find out when the institutions are coming here, coming into a trade in a big enough size, in a big enough consistency. In other words, you have a bunch of institutions all trading in the same direction. That's what we want to know, and that's where we get the edge. All right. So that's what drives the market. When a trend is being set or reversed, it's typically the institutions that are doing it. All right. This is seems a little off topic, I'm sure, but I want you to understand something. This is obviously a blackjack layout at the Ace and Jack of Spades with a couple $100 chips out here. This is blackjack, and the reason I bring this up is and a lot of times when you're talking about learning how to trade or making money trading, this is what you get from any of your relatives or friends. It's trading stocks and options gambling. They'll tell you that it's gambling. Trading stocks and options is gambling. You're going to lose. Well, when I was much younger, I made my living playing blackjack in casinos. I was in Las Vegas, and I was a card counter. I kept track of cards. And you're actually not counting the cards. You're keeping track of the low cards and the high cards as they leave the deck, so you have an idea of what the composition of the remaining cards is. So when the little cards are removed from the deck, 5, 4, 2, 3, 4, 5, 6, and 7s, as those are removed the deck and the composition of the deck has more large cards than it normally would, this gives the edge to the player. All right. So this gave me a mathematical edge over the casinos by knowing what cards are in my favor. So what did I do? Well, when they were in my favor, I bet bigger, and when they were against me, I bet the minimum. Right. So anyway, I did this, to make a living, and I did make a living doing this. The reason I bring this up is trading stocks and options is very similar to that, because without knowing what the institutions are doing, the trader has no edge. So in essence, they are gambling. So if you don't have an edge over other retail traders in the market, you are gambling when you're trading stocks and options. But by having something that lets you know if the institutions are in there or not, then you now can get an edge over the other retail traders. So the SPY Super System, the software, I consider that's my card counting system. This is what tells me when I have an advantage and I want to take those trades, and when I don't have an advantage, I don't want to take those trades. Okay. It gives us an edge over the other retail traders, allowing us the ability to be consistently profitable. All right. Now, the SPY Super System, which is the software, in conjunction with identifying the best high probability trades, can lead to consistent profits. I mean, it's really pretty easy if you can understand that when the institutions are in Tesla, for example, and a lot of them are buying Tesla, then you want to be buying Tesla as well. Now, when it's just chopping around and these institutions don't have any kind of a bias one way or the other, then you don't trade that stock. So you want to find what the institutions are doing with the market and with individual stocks, and then you want to pick the best. You want to pick the best stock that's got a high probability trade that the institutions are in. Right, so that's what we look for. Now, in the room and on the alert service, of course, we have a couple of basic rules that we trade by. We trade the best and skip the rest. So this is, again, identifying when the institutions are in the trade, these will become the best. When they're not in the trade, they're not the best. We skip the rest. And it's important to understand that when you skip a trade, it might look good, but the institutions aren't in, and you avoid taking that loss. That's just as important as taking a winning trade. This being able to skip the trades that aren't going to work is really, really critical. And you'll see with my results, we don't take an awful lot of trades. We're only just looking for the best trades. And the second thing is our objective. And this is in the room, in the alert service. Our objective is not to make trades. Our objective is to make money. So we do this by taking a limited number of trades that have very, very high probability. So those two things is what keeps us focused. It keeps us patient. It keeps us looking for stocks to set up, but we don't just jump wildly into trades. Most retail traders, one of the problems with most retail traders, the reason they lose money, one of the reasons they lose money is they overtrade. They take too many trades. They feel like they're a trader. They think they need to have a trade on all the time. It's exactly the opposite. You want to wait for those setups to come when the institutions are in there and take those. And you don't need a lot. You don't need a lot of trades to make money, but you need a lot of good trades. And a lot of traders are very impatient. They can't sit there and not put a trade on They've been 2 hours, they haven't put a trade on, they start to justify reasons to take a trade. Okay, now maintain discipline. This is what we teach is we teach a methodology to trade, how to find the highest probability trades, and we teach that, and that's called the process. We're going to learn and follow the process. The process I'll show you is basically I'll go through all the steps that we use. You know, the institutions being in there, that's one of the steps we use. Relative strength and relative weakness of a stock versus what the SPY is doing. That's another criteria. So we'll go through those. So you need to learn and follow that process. All right, and then remain patient. So once you learn how to do this and you are patient, wait for those setups, you're going to have a very good percentage win rate. All right, but it takes time to learn it, and it takes time to become patient. Impatience is one of a big drawback for most of retail traders. That's another one of the I did a video on 11 reasons, 11 common mistakes retail traders make. Not staying patient is one, and over trading is another. Okay, so we as profitable traders, we need an edge over other retail traders. Remember, this is who we're trading against. You're not going to take money from the institutions. You may think you're going to take money from the institutions, you're not. You're going to take money from other retail traders. So we just need to be better than they are and have better tools than they do, right? So we need an edge. This is our edge. Our edges are very critical. We have the SPY Super System software. This tells us whether the institutions are in a trade or not. It's very hard to tell if an institution's in a trade without something like the SPY Super System, because what happens is, before I had the SPY Super System, the only way you could really do this was to look at price action and volume. That could tell you, but the problem with that is it isn't really telling you if you have consensus across institutions on a trade. You just know that there's a lot of volume in there, and that can be a multiple. You could have a big volume. If you had one institution buying it and another institution selling it, it's going to look like a lot of volume, but you don't have a consensus on the institutions. So the SPY Super System software is a big edge. This is a huge edge for us. Trading relative strength and relative weakness is another. And now this is one that most retail traders overlook. And I'm not talking about RSI here. I'm not talking about relative strength index. I'm talking about when you're looking at a stock, how is it trading in relationship to the SPY or the Qs? If the SPY is moving sideways or down, and you've got a stock that's stacking green candles, it's got relative strength, and vice versa in relative weakness. This is a big edge, because if you get into a trade, it's got relative strength to the market, and then it turns against you. If the market turns against you, your stock is not going to fall as fast, because the fact that it has relative strength. So we look for relative strength or relative weakness. We trade with the market trend if there is a trend. A lot of times there isn't any trend. A lot of times you'll get a gap up in the morning and the market will just chop around all day. That's kind of a trendless day. At that point in time, we get much more specific and much more granular on what we're looking for. Since we're trading, there's no trend to follow, we have to look at the other indicators. And the last one is buy near support and sell near resistance. This is really important. One of the things that a lot of traders suffer from is what's called FOMO, a fear of missing out. And they see stocks that are stacking green candles in the morning. You see Netflix putting green candle after green candle after green candle on a 5-minute chart, and you're standing there, you're sitting there watching it, and you can't take it anymore, and you jump in. And you usually jump in somewhere near the top before it reverses. It's very important to buy near support and sell near resistance. If that's the case, wait for the stock to come back down to a support level and then bounce off of that support level. And then you can confirm that it's gone back into the original trend. That's where you want to go in, get in near the support or selling near resistance. And this is going to allow you to get into a trade. And if it does go against you, your loss is going to be minimal. If you're chasing a stock that's going up fast and it turns against you, you don't really have any support place to a support level to lean on. For it to go all the way back to support, you're going to be underwater really heavily on that. So that's the fourth thing, and it's really important. Okay. Now the compass system, the SPY Super System used to be called the compass system. We've added a bunch of things to it, some scanners, some more indicators. It's just been improved. So now it's called the SPY Super System. But the actual system itself, what it does is it identifies the highest probability setups while sidestepping the setups, again, that look good but will feel more often they succeed. That's the skip the rest part. It does this by identifying when institutions are driving the move and when they're not. Okay, it's looking at several things, and I'll explain what it's looking at. Now, the software is analyzing very complex trading data. It's really crunching a lot of numbers, and it displays the results in an easily identifiable visual format. You can see the colors, and I'll show you those. You get green and blue for long, red and yellow for short. Very easy for even a new trader to see. So this visual element makes it possible for even new traders to find high probability trade setups. So how do we get an edge over retail traders? Individual traders' edges, we only take trades that are being driven by institutions. I keep saying this is important. Trading stocks that have relative strength and relative weakness versus the SPY or the Qs. Trading in the direction of the overall market. If you do these three things here, you'll be head and shoulders above 94, 95, 96% of retail traders in the world. They just don't know this information. You have better information than they do. That's what it takes to beat them. And how does it give us an edge? Our trades will be supported by institutional buying or selling. The stocks will be outperforming the index, and the stocks are moving in the direction of the overall market. That's a big, huge edge. Big, huge edge. All right, now it's important to understand that when I show you the trading results we've had outstanding trading results. About 88, 89% win rate is what we maintain month after month after month in the room and on the alert service. But how do we do that? The basics of this is the SPY Super System software is the underlying reason for being able to do this. The SPY Super System software, it's the critical element in finding and trading the highest probability trades. Very important that you're only in trades that the institutions are in. The SPY Super System software is the engine that drives our exceptional results. So when you see the results we've had, keep in mind, we're getting those results because we have the SPY Super System software to lean on. The ability to identify when institutional players are driving a bullish or bearish move and when they're absent, it's the key factor in pinpointing high probability trade setups. If I'm looking at a trade that I think looks like a good trade and the SPY Super System telling me that the institutions are not in there for either long or short in force, I'm not going to take it. I'm not going to skip it because I know they're not pushing the trade. So this is the function of the SPY Super System software, and it's the critical component of how we have the results that we have. Okay, and I just kind of this is I'm not going to spend a lot of time on this, but this is Thinkorswim with the SPY Super System software on it. Right? This is what it looks like. What you're seeing here is it's three indicators down here and some things up here. This is a 5-minute chart. This right here is the actual oscillator that is driving these colors. But what we look for is this is the current time frame momentum, right? This is whatever current time frame your chart is on. This is the current time frame momentum. You notice here it's red and then it goes blue. This goes from bearish to bullish, right? Multi-time frame momentum. We're looking across multiple time frames. On the 5-minute chart, it's looking at the 5, the 15, and the 45. It's looking at momentum across those 3 time frames. This, of course, is just the 5. And then this is a long-term trend. This is also looking at trend across 3 different time frames, right? But on a 5-minute chart like this is the key thing when you're trading 5-minute charts, the current time frame momentum. If you're doing quick intraday trades, if you're using swing trades, you would be looking at a daily chart and you'd want the current time frame momentum and the multi-time frame momentum to be both either bullish or bearish. And that would be blue and green for long, red and yellow for short, right? So those are the indicators. This white line is a pivot point. It's just something that the SPY Super System puts on the chart. Very good support resistance. On the 5-minute chart, this is called the VWAP. And if you don't know what the VWAP is, this is something that's critical. This should be on all of your 5-minute charts. You should always have this VWAP on your 5-minute chart. This is a very key level that the institutions use. All the institutions use this VWAP to buy and to sell. So it's important to have that on your 5-minute chart. It's not effective on the daily chart. It's only effective on the 5-minute chart. This is the 15 EMA of an EMA. This is a smooth 15 EMA. Both the VWAP and the 15 EMA is what we use for support and resistance levels to enter trades off a 5-minute chart. Right. So those are what you've got here. We also have what's called these pop symbols, these blue arrows and pink arrows. These tell you that you're getting a compression break. The stock is breaking down to compression or breaking above compression. So this gives you a little extra impetus to take a trade when you find out that it's breaking out of compression, because that typically would be a breakout or a breakdown. All right, so that's what it looks like. This is a just kind of trade, a couple of trades I threw up here just to show you ones we've taken recently. This is a daily chart of SMR, which is this is one of these small little nuclear companies that are creating nuclear devices to drive electricity for AI. So this is SMR. This is when we entered on 513, exited on 515 for 56% profit. And 2,000 invested created a $1,170 profit. Because I use 2,000 on all my trades just so that I don't necessarily trade that much, but all the results I show are based on $2,000 a trade. So I've got some consistency and some baseline I can use. All right, but if you look at the chart here, what you see is a lot of compression in SMR on the daily chart. And now here's your indicators down here. This was earnings right here. You see where we went from yellow on the current time frame momentum, even though we were green on the multi-time frame, was bullish on multi, bearish on current time frame. It went to green right here. Current time frame, multi-time frame, and trend all lined up right here. This is where we took the trade right here as the stock broke out. And again, we made 56% profit in 2 days on SMR. All right, that's all we needed to do. This was on Tesla. This was a 5-minute chart on Tesla. All right, you can see 5-minute chart on Tesla here. Here's our indicators again. All right, so you see how Tesla went from red here on the current time frame momentum with 5 minutes to blue right here in the open on Friday. And you see how the stock popped up above the VWAP right there? So you can take the trade right there because it went blue. This was yellow. We don't care because we're only interested in the 5-minute chart. We're only interested in this right here. We weren't swinging this. We're intraday trading Tesla. So it moved up above the VWAP. You would take it right here. You ride it up, and then when it turns around, it starts heading down. You get out. Notice it went from green, buying, right, bullish on the 5-minute chart, to selling on the 5-minute chart right here, the next candle. So you would have been out of it right there. All right, so that was would have been a nice little trade as well. And I do a lot of these intraday trades, but the ones typically most of the ones we alert on are going to be swing trades. All right, and this was the SPY. This was a trade in the SPY. I just want you to see the logic behind this. Here's your current time frame momentum here. You notice it's bullish to go bearish. It goes back to bullish again. See as it's compressing here and it's breaking above the VWAP right here. As it breaks above the VWAP, you say institutions are coming in. This is where we take it, and you take it right up, and then you get out right there on the SPY. So that's a nice little 5-minute trade on the SPY, a few candles. But just so you can see how the indicators are used on a 5-minute chart to identify your entries and exits on this. This is a daily chart of Wendy's. This is one we took here. If you look here, this is earnings. Notice that you can see pretty clearly that it's mostly red. It went from blue here on earnings and went to red on the current time frame momentum. Now this is a daily chart, which means we want the current time frame and the multi-time frame momentum to both be either red or yellow. And this went to red here. We took it right here on this breakdown with this dynamic compression breakdown, pop out of the box symbol. As it broke compression, we took it here and we made good money on this Wendy's. We just had it for 1 day. I made a nice profit on it. But just so you can see how we find those. Now this is kind of something I just throw in here to add a little humor. This is somebody who is not using a SPY super system or not understanding what high probability trades are, not trading when institutions are in there. Perhaps somebody that jumped into a FOMO trade that was ripping up and it turned around and headed back down again. This is emotion. This is what causes most traders to have big problems, is they start trading with emotion. Emotion starts to drive their trading, and it's dangerous. I mean, it's going to cost you a lot of money. So you don't want to be this guy. All right, this is the guy you want to be, somebody who's got some methodology, some strategy, and you know when the institutions are in the trade, and he's following those, and he's made some money. Maybe he got into a FOMO trade after it pulled back and started to bounce and took the win on it. So you don't want to be this guy. This is the guy you want to be. Okay. All right. So this is something that I kind of added recently. It's process precedes results. And the reason I did this was a couple of reasons. But one, the main reason I put this in here is because a lot of traders trade by watching their P&L. They're watching whether they're up money or down money on a trade. And that's what's driving their getting into a trade and getting out of a trade. And it's not the proper way to do this. Process precedes results. That means Learning the high probability criteria in the strategies must come before focusing on results. When you enter a trade, you should be entering a trade based on some technical setup that you see with some conviction. All right. You should be getting into trade off of technicals. You should be getting out of technicals. You shouldn't be getting out based on how much money you're up or down. If you're trading off your P&L, you're doing it backwards. So if by focusing on results like P&L, without having a solid process to follow, it's going to end up in failure. I've seen this hundreds and hundreds and hundreds of times. People trade their P&L, they take a trade, they make money on it. They make the assumption that the trade was a good trade. It wasn't. It was a horrible trade. They just got lucky on it. And if you take a trade that's based on methodology and strategies that have winning percentage winning rates that are high, and it goes against you, you make the assumption that was a bad trade, but it wasn't. So you can have good trades that don't make money, and you can have bad trades that make money, but that should not be your focus. The focus should be always learning the criteria, getting in on the technicals, and getting out on the technicals. And I'll take a lot of trades that are swing trades. We'll be underwater for a while, and I'll get a lot of questions. But why haven't we exited here? We're down 10%, we're down 20%, we're down 30%. We haven't exited because the stock itself on the daily chart is still bullish. I'm not going to get out if it's still bullish because it hasn't started to work yet. But many times they'll recover and start to move back up again. If you get out, took a loss, you go back and look at it 2 or 3 days later, and you would have been up money. You don't want to get in that situation, and that's caused by focusing on your P&L, not focusing on the high probability trade setups or the technicals. All right, so that's why I say this process precedes results. Learn the process, trade off the process. Don't even look at your P&L when you're trading. I don't even look at my P&L during the day. This is just another quick thing I threw in here, and this will be on the replay if you want to learn this or use it. It's called an OODA loop. It's observe, orient, decide, and act. This is basically a process that folks go through. This is used by military, it's used by corporations, but for my purpose, it's OODA. The observe part means using my scans, watch lists, and news to identify prospects. That's how I'm observing. Okay, where do I find my prospects? Orient means identify whether the prospect meets the high probability trade criteria on the daily and the 5. Identify support and resistance levels, know the next earnings date, check the option chain for pertinent information, expiration date, bid-ask spread, etc. That's how you orient yourself to the trades, the stock you've seen here. Now you're kind of narrowing it down. Then you decide. Make your decision on whether this trade qualifies as a good high probability trade setup. Once you've done that, act. Make the trade. Try to avoid analysis paralysis. Don't be second guessing yourself all the time when you're following these criteria. Okay, this is the basic high probability trade setup funnel. This is a virtual process I go through mentally every time I look at a trade. And this is important. The daily chart and the 5-minute chart need to be aligned. But the most important thing is if you're going to go long a stock on a swing type trade, and when I say swing, I mean you can be in it for a few hours or you can be in it for a couple of weeks. The daily chart has to be bullish if you're going long, and it has to be bearish if you're going short. Please don't trade against the daily chart if you're going to be swinging your trade. You don't have any, you've got no staying power. If it turns against you, you can't stay in it because you're going long a stock that's bearish overall. So you don't have any ability to stay overnight. You can't even stay in it through the day. All right. We trade with the trend of both the stock and the market. What we call the context. What's the context of the trading the market that day? What's the SPY doing? Is it gapping up and keeps going up? Is it gapping up and chopping around? Is it just drifting all day long? It's important to know what the trend is for the market and the stock that you're taking. Then this is the key thing right here. The SPY Super System software has to align. If you're going long, the SPY Super System indicators have to tell you that that stock is bullish. That means it tells you that the institutions are in it. If they're not, if you're looking at a swing trade and you're looking at your daily momentum, okay, multi-time frame momentum, and you look at that and it's telling you that the institutions are either neutral or bearish, you're not going to take it. They've got to be bullish, both on the 5-minute chart and on the daily chart. Okay, and then we talk about relative strength and relative weakness. I've talked about that. and enter near support and sell near resistance. Okay, so that's the basic high probability setup. This is what the process we go through looking for institutional trades and trades that we're going to take. All right, and this is just the funnel method, just written out. Again, SPY super system indicators must align in the direction of the trade, and the stock to be traded should have a daily and 5-minute chart aligned. Both of them need to be bullish. All right, and the rest of it we just covered. Now, just before we get into Heikenhachi, I want to just go over this, what the strategies we use in the room. We use straight calls and puts a lot. A lot of our trades are just straight calls and straight puts. I do some straddles and strangles. These are non-directional trades where I don't care which way the stock goes. I just want it to move fairly fast. I want it to move in one direction or the other. We had a good one on Hood the other day, but straddles and strangles are non-directional trades. And it's important to have multiple strategies you can use because you get multiple market conditions. You want to be able to adjust your trading strategies to whatever the market's doing. We do debit spreads, usually using weekly options expiration. Obviously stocks that have weekly options. I do time spreads over earnings. This is one we just did on STZ this week. Time spreads over earnings. It's called a calendar spread. This captures volatility crest. This is another non-directional trade. We take a trade when earnings are coming out, just before earnings are coming out, and where they've jacked up the price on the premiums, the puts and the calls, because they don't know which way it's going to go and how far it's going to go. And this is a way to harvest that implied volatility crush that comes when the earnings come out. And I use a thing called the weekly ATM strategies. Haven't been able to do any of these lately, but this is where we sell puts against a bullish stock or a neutral stock week after week after week to bring in premium, and while we maintain a longer dated long put further out in time to protect ourselves. And I have videos on all of these, but I just want you to see what we're using in the room. Credit spreads as well to capture premium over a few weeks. And the last one here is the SPY super system. Now, the SPY super system, we've got the SPY super system software, right, that tells us whether institutions are in the trade. Then we have what's called the SPY super system methodology. This is where we trade indexes like the SPY, the Qs, the IWM, or the futures, ES, NQ, etc., off of a 5-minute chart for very high probability trades to catch the moves in the SPY moves or the Qs or the futures. Now, these are very quick trades. I can't really call them out in the room. I identify them when they're set up, but I can't post them or send alerts on them. But we do them in the room, and I'll show you how this works. And this is for people that like to trade a lot, but want to be trading only high probability trade setups. Okay, John, does the SPY super system component use an AI to determine if institutions are buying and selling? It's what it's looking for. It's looking across three things. It's looking across momentum, trend, and money flow. But the key thing here is momentum, and it's important to understand what momentum really is. There's kind of a misunderstanding about momentum by a lot of retail traders. If you see a stock that's the price is going up, you're getting a green candle followed by a green candle by a green candle, traders will say, well, this stock has got momentum. But the way we measure momentum, and the way momentum should be measured, is you look at candle after candle after candle. You look at where the stock opened on the candle, where it closed on the candle, and where the high was on the candle. All right. So on a 5-minute candle, if the stock closes close to the high, but well below the high, but moving up toward the high on this candle, and on the next candle it closes closer to the high, and the next candle it closes closer to the high. If the price of the stock, the closing price on the candle, is getting closer and closer to the high of that candle, that's momentum. And if you see that across 3 different time frames, that tells you that the institutions are driving the trade. That particular criteria, with momentum getting closer to the high of the candle each time, will indicate that institutions are doing this. It's not going to happen across 3 time frames and every candle is getting closer to the high unless you've got institutions driving. That's where it comes from. All right. So I wouldn't say that that's AI, but the point is that you're looking at something that is basically a brand. All right. And one of the other things we use is market internals. So we look at all of these stocks that are going up. We look at the cumulative volume on stocks going up minus the cumulative volume of stocks going down to determine if we have bullish or bearishness. And if you've got cumulative volume going up, it's way higher than cumulative volume going down. That also adds to the likelihood that institutions are driving the trade. Okay. All right, and just to cover the alert service again, it's designed for day trades and short-term swing trades. It's not an investment. Most of these trades are going to last, 1 day, 2 days, maybe 2 weeks, but that's about it. It's designed for traders who can't watch the market all day, and it's going to give you real-time alerts on the highest probability trade setups. We spot them in the room, we take them in the room, we set an alert out on them, right? And these highest probability trades are done by identifying when institutions are in the trade. I keep talking about this, it's really important. And what the market, if the market internals are also bullish, and then we do technical analysis to find the best one, right? And I will take trades if the institutions are in there and the market internals are neutral. Those will still be good trades as long as the institutions are buying or selling that particular instrument. All right, and this is just an equity curve. This shows the equity curve for the, I guess it's Q4 and Q1 of 2024, 2025. You'll see the results. The results are very consistent year after year. The monthly results go up and down depending on the market, but year after year, they're pretty much the same. All right, I want to now get into Hypothetical. All right, now these are Hypothetical candles are something that you can use to improve your trading, staying in trades longer, getting into trades, of finding when a stock is going back into a compression. Going back into a trend. We talked about stocks racing up and then coming back to support and then bouncing, right? What you're looking for when a stock comes down to support and bounces is you're looking for confirmation that stock reversal, the price reversal back into the original trend is occurred. Because otherwise you can get a failed breakout. And using Hypothetical candles is one of the best ways to confirm that price is reversed back into the original trend. Really, it's so helpful. Okay. So again, using Hypothetical candles with the SPY super system. So here we go. Now, these are Hypothetical candles. It says British pound, Japanese yen, doesn't make any difference. Could be Tesla, could be NQs, this can be anything, could be gold, but these are what the candlesticks look like. Okay, Hypothetical candlesticks have flat, see how these have flat tops? There's no wicks on the top of them. Those are bearish Hypothetical candles. A bearish Hypothetical candle is not going to have a wick on the top. Those are very bearish Hypothetical candles. Now you can get some with some little wicks, and you'd be in a trend. But if you were looking for a reversal, this is not. You want to be looking for the flat tops and the flat bottoms. So here you have bearish candles. You see how the flat tops are coming down. See how easy it is to spot the trend. Now we're starting to get reversals here. Wicks and tails, wicks and tails. Now we get a flat bottom. Right, this is a Hypothetical reversal, bullish Hypothetical reversal candle, right? Because we went from flat tops to dojis to flat bottoms. That's a Hypothetical reversal candle. Now, a little caveat for this. When you get a Hypothetical reversal from a bearish trend to a bullish trend, you want the candlesticks, Hypothetical candlesticks that are creating that reversal, you want them to be as big as the ones that are coming down. So in this particular case, I wouldn't take this, because this candle is not big enough to offset the momentum that we had coming down here. So I'd wait for a better indication of reversal. And you could have made money on it. As you can see, we got a Hypothetical reversal right here, the flat bottom, keeps moving up, and then it starts to reverse back down again. So you could have made money on this, but it's not one I would take because I don't feel like this is a real confirmed reversal. So we keep watching, and now we have a bearish reversal here. Flat top, and then we go to wicks and tails here. Here is your Hypothetical reversal to the bullish side. This is reversing. This trend chops around. This is the big reversal on this particular trend right here. See how we get flat bottom? And see the size of that candle? It's a big, long candle. It's bigger than these candles. That gives you your Hypothetical reversal. This is where you would join in, and you follow it up, and you see how you keep getting flat bottom after flat bottom. Couple of wicks and tails, another flat bottom, flat bottom. This is a Hypothetical trend right here that you can take. Now notice that each one of these candles starts in the middle of the previous candle. Okay, see how they did over here? Middle of the previous candle, always start in the middle of the previous candle because of the way they're constructed. They're made up of two candles, two regular candlesticks to make one candlestick. So there is your Heikenhachi reversal right here. Flat tops, coming down bearish, kind of choppy, bullish reversal right there. You jump in on this candle and you ride this thing up. All right, and this is where you would likely take profits right there. Again, so no tails on bullish Heikenhachi candles, no wicks on bearish Heikenhachi candles. Okay, now, again, this is important because this is something you need to remember when you're looking at Heikenhachi candles. Bullish Heikenhachi candles have flat bottoms. We just showed that. Bearish Heikenhachi candles have flat tops. That's what you're going to be looking for. The bullish Heikenhachi reversals are identified by flat top Heikenhachi candles, followed by flat bottom Heikenhachi candles. All right, that's your bullish Heikenhachi reversal, going from a bearish trend to a bullish trend, and vice versa. Bearish Heikenhachi candles are identified by flat bottom candles, bottom HA candles, followed by flat top Heikenhachi candles. So again, here's your flat top Heikenhachi candle. Those will be bearish reversals. Bullish reversals have the flat bottom. Right, so I emphasize this because this is one of the most important things that you need to remember about Heikenhachi candles, what they look like. When you see them on the charts, and we'll go over, I'll show you a bunch of those. So again, if you've not used these, you can put them on your platform very easily. When you select just your candles type, you can have candlestick, you can have high-low close, but you can have Heikenhachi as one of the options, and you can switch to Heikenhachi candles. All right, and it means average bar in Japanese. It basically smooths out the price action, so identifying the trends and reversals is clearer. And since it eliminates a lot of noise, it makes it easy to see trends and stay in the trade throughout the trend, allowing for improved performance, improved profits. You're not going to get shaken out as easy. And when you get the video, you'll get a replay. You can read through all of this. I'm just kind of hitting the highlights. We've already talked about the flat tops and flat bottoms, and again, how you find reversals. Okay. Now, so just to kind of recap these, because I want to look at some of these and show you what they look like. It's basically Heikenhachi candles evolved from Japanese candlesticks. They combine the open close data from the previous period, the previous candle, with the open high low close data from the current period. That's why they always start at the middle of the previous candle. All right, and again, it translates to average pace is what it translates to. All right, so again, here is a repeat of this. This is the most important thing to understand about Heikenhachi candles. All right, here's this trend we just saw a little while ago. Heikenhachi bearish candles right here, flat top, flat top, flat top. Switches to choppiness, flat bottom, but they're too small. Chops around a little bit. If this, for example, was a VWAP or a support resistance level that you wanted, as the stock breaks through that support resistance level with a bullish Heikenhachi reversal candle, that's where you take the trade. You take the trade right here, and you would stay in this as long as it stays above your support resistance level. So you wouldn't get shaken out on a candle like that. You'd stay in it. Now you'd be getting shaken out up here. As you start getting wicks on the Heikenhachi candles, and then it reverses back down again. Here's your exit. Here is your entrance right here. So hopefully you can see that trend. That's what you're looking for. Okay. Now this says tips for using Heikenhachi candles. Now the tips, this was related to any trade that you're taking, obviously. Make sure you know where your support and resistance levels are and how those are going to impact your potential gains. If you get into a trade that's 20 cents below the 200-day moving average on the daily chart, you really don't want to go long. You don't have enough upside potential. So make sure you know where your support and resistance levels are. Align the trade with the current market trend if there is one for increased success. And again, choose relative strength and relative weakness. We've talked about this. So you find the best ones. The Bollinger Bands, I mean, those pop out of the box symbols on the Thinkorswim platform will tell you that if you're getting a pop out of the box arrow, a blue arrow or a pink arrow, that is telling you that the Bollinger Bands are indicating a break of compression. And after I don't necessarily switch to standard candles after taking the trade, but when I want to exit the trade, I'm going to switch to standard candles when I want to get ready to take profits, because I want to catch any reversal before it gets confirmed by the Heikenhachi reversal, because I want to take profits. I'm not waiting to stay in. I want to take profits, so I want to find that reversal more quickly. Okay, so again, there's a distinction of the Fibonacci candles. Bullish Fibonacci candles have flat bottoms. Remember this? Bearish Fibonacci candles have flat tops. And again, how to reverse? You're just looking for going from a flat top to a flat bottom, or a flat bottom to a flat top. That's what's going to tell you that you've got a reversal. So again, the advantages of these Fibonacci candles, and we're going to look at some charts here with some actual Fibonacci candles from Thursday, so we can see it in real time. It smooths out price action, reducing noise, makes identifying trends much easier. You're not going to see as much noise on a 5-minute chart, because if you've traded on a 5-minute chart and you get a really ugly candle that comes in your trend, a lot of times you're going to freak out and get out of the trade. You start to feel emotion. You think that thing's going to turn around and head back down again. If you wait for the Fibonacci candle to tell you whether it's going to head back down again, you'll be a lot better off. And it improves identifying confirmation of trends and trend reversals, and helps identify potential exits when the candle bodies shrink or the reversal occurs. So those are the advantages of Fibonacci candles. And this is a chart of Uber. This is my TC2000 platform. I have a TC2000 I use for charting, and then Thinkorswim for my SPY super system. But I just wanted to show you what Uber looks like on a regular candles. These are regular candles right here. All right, here's the regular candles with gaps in them. All right, gap up, see gap up, gap up. All right, now let's switch to, this is May 1st. Let's switch over to Fibonacci. Here's May 1st. Right, so see the Fibonacci reversal candle right here with the flat bottom. Notice with Fibonacci candles, there are no gaps, right? Because it's starting in they're using 2 candles to create 1 candle. This is where you would have taken the trade right here on this particular candle, May 1st, as it broke above these are moving averages. That's the 100 right there. This is the 50 right here, the red line. But it broke above it. And there's your, see this trend to the downside? Flat tops, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. So you grab this right here, you get a really, really nice profitable trade right here, and then you get out as it starts to level up. But that's what you're looking for. All right. And again, if you look at this, you see if you get in May 1st, you would have got in right here. Oops. This candle right here is May 1st. This is where you would have got in, and when you would have caught that gap up. And you can see right here how nicely that sets up on here. All right. So I'm going to look at some live Fibonacci candles. Well, not from Fridays, from Thursday's trading. All right. And I have a few that I want to show you. And first thing I'm going to do is I'm going to show you them on my TC2000 chart. And then I'm going to switch to the SPY Super System chart, because I want to see the ones we spot here. Let's see what they look like as far as institutional trading is concerned. All right, so let's this is the daily chart right here. First stock I'm going to look at is NVIDIA. This is NVIDIA right here on my TC2000 chart. I've got lots and lots of lines on here that are high volume horizontal support and resistance lines, but ignore those for right now. What we're looking at is this is regular candlesticks. Then I'm going to switch to Fibonacci candlesticks. Okay, this is Fibonacci right here. Now, if you look at NVIDIA, you notice that we got a Fibonacci reversal right here, and then we've been stacking candles, and now we're just kind of getting flatness here. You're getting a couple of dojis, and then we've got a flat Fibonacci candle here. Again, this is a bullish Fibonacci candle. This would be considered a Fibonacci continuation. This is a continuation of the existing bullish trend based on this candle right here, this Fibonacci reversal candle right there on NVIDIA. Okay. And if I wanted to see if I wanted to take that trade, I could switch over to NVIDIA here on a daily chart. This is my live chart of the SPY Super System on Thinkorswim. This is what it looks like. Right. So here's the daily chart of NVIDIA. As soon as they're under maintenance here right now, so some of this stuff may not come up. And there it comes. But so what we're looking at, if we wanted to take NVIDIA, what we'd be looking at is, okay, we look at it here. What's the current time frame momentum on the daily, multi-time frame momentum, and the trend? What's it look like? It's all bull, all green. So if we wanted to consider taking NVIDIA as a Fibonacci reversal candle on that chart I just showed you, this would be a go. This could tell you that NVIDIA, that I've got this written down to take Monday morning if it's bullish. All right. So that's the first one. All right, and I'm going to show you a few of these. All right, so one other one I looked at was SOFI, SOFI. This is the SOFI candles. from Thursday right here. Again, this is a continuation. You see, this is not a reversal because we're in an uptrend. But I noticed this candle right here, put in a little bit of a tail, and then another flat bottom on Thursday. So this is a continuation of this uptrend already. It's been in here, it's been in this uptrend for quite a while. Now, if I look to regular candlesticks, this is what it looks like. And if you were looking at this chart, you'd probably look at the top of that candle and say, kind of want to see it break above there, which is true. But that is a Heikin-Ashi continuation on Sophie, all right? So if I switch over back over here to Sophie over my Thinkorswim platform, what are the institutions doing with Sophie? They're buying the heck out of this thing. You can see this. You can see how long they've been buying this thing, all the way through this whole trend, and this is just a continuation of it. So again, another good potential buy right here. All right, so Sophie. D-Dog, this is going to be, they just got put into the S&P 500 on Friday. Thursday, you see the big bounce here. Look at this massive, massive candle, massive volume. That's volume. This has been in an uptrend already, but this is a Heikin-Ashi reversal candle. But on something like this, you've got to look and see how far extended is this. That's a pretty big move on the stock. So it's probably something I wouldn't take. But I just want you to see that that's what the Heikin-Ashi reversal looks like on it. And if I switch over to my Thinkorswim platform, and I put in D-Dog, there it is, and these are going to pop up here in just a second. Again, you see they're all green. Again, this is another good one, but it's a little extended for me, technically, but it's a very nice chart, all right, on D-Dog. And another one, and this one is, I'm going to talk about is, this is going to be one that that I really like. This is TTMI. I think TTM, no, TTM. Let me look at TTM. Oops, TTMI. Sorry about that. All right, this is TTMI. Okay, now you see the buying coming into this thing. All right, really beautiful, right? The institutions are in buying this, absolutely are. Now, if I switch to my TC2000 chart on this, all right, let's look at TTMI. All right, here's TTMI. This is Heikin-Ashi. All right, now notice it's been a long trend, and see how this keeps coming up. This white line, by the way, is the 8 exponential moving average on the daily chart, which I use all the time, the 8 and the 15. I use these together. But this is a nice move up. But notice we're in a Heikin-Ashi bullish trend. But we have on Wednesday, we had a little bit of a tail on and a tiny little tail on Tuesday, then a flat bottom again on Thursday. This is a beautiful setup. And if I look at the regular chart, this is the kind of, when I'm talking about what's the trend like, what's the context like of this stock, see how beautiful this stock has been moving up and then compressing and then moving up and then compressing. And now it's moving back up again and it's breaking out right here. This is a chart that if this thing opens green on Monday, I'm definitely going to take. This is a stock to take on Monday as a long. It has earnings on the 30th of July, so you've got a little bit of time on this, but I really like that TTMI. Okay, so that kind of I think an excellent potential trade for Monday. All right, and another one more to look at is TMC. Right, now look at TMC. Now here's TMC on the daily chart, and it looks good on the TC2000. But you see what we've got here? You see the momentum on the current time frame momentum. Multi-time frame looks pretty good. Current time frame is yellow right here, and this is the momentum indicators coming down. So even though TMC looks really good on the daily chart, I'm not going to take it. I'm not going to take it because I don't like this momentum right here. This is telling me that on the daily chart, the high of the daily candles are not getting closer to the top of them when they close. So this tells me that I don't want to take this until I get this to switch over to blue. Right, switching over to blue, I could take it, but right here I couldn't. Now, if I look at TMC on my TC2000 chart, without knowing what the institution is doing, this looks pretty good. I mean, this looks like what's called a PBO, a pullback opportunity. Stock moves up, comes back, goes through the 8, bounces off the 15, and broke out nicely on some decent volume on Thursday. So it looks like a good potential long trade, but I cannot take it because there's too much risk that it's going to fail because of that right there. All right, so that's how I use Hypothetical candles to find reversals in trends, as we just pointed out. Now, if I go back and look at a 5-minute chart on Thursday, sorry. Get out of there. Okay, fine. So if I look at the 5-minute chart right here, and I want to, let's say I want to trade the SPY long or short on Friday. So this is where the market opened back in here on Friday, gapped up, and then it moved. You see how it moved here? Everything is green. It's moving up above the VWAP. So you can actually take a trade right here off of this right here. You can take it along here as long as it stays above the VWAP. You see how it stays above there? You can stay in that trade. It's moving very slowly. I didn't take this because this didn't have a very good pace to the market. But you could have taken that long, and then when it pulled back down, you would get out. But that was one of them. Now here, you see how we got a short right here as it broke down, as it went yellow. But notice it came right down to the VWAP and went up. Came down to the VWAP and went up. This is why you don't want to be taking a trade short unless it confirms below the VWAP. All right, so that's on the SPY, which you could do with that. On some of these things, let me see one other stock that looked pretty good. CoreWeave was one that had a pretty decent day on Thursday. Let's go back here. Yeah, I think this one is under maintenance right now. So, but here's what you've got here on my CoreWeave. This is a decent setup right here. It's coming along the VWAP, and it goes from yellow selling to blue buying. And we're only interested in the current time frame momentum on the 5-minute chart right there. It pops up above here, and you can take it right here, or either right here, but likely right here. You want to get it on this blue, and it moves up, and you just stay in it until it starts to fade. And probably you would take profits right here as it starts to pull back. And then it heads. He puts in another big one right here. But notice the institutions are buying all the way through until right here, until about 1:30, right here. Now your momentum is dropped. So you don't want to be in this thing long right here. Then you can wait to see if you get another. But now we're getting a lot of chop. See the color changes? So that's why I wouldn't touch that one here. All right. So that's how you use Hypothetical candles. And again, if you come to my room or you join the alert service, I have videos on how to use Hypothetical candles, especially to find reversals back into trends again. All right. All right, so we looked at some of those Hypothetical reversals, and that's how you use them. Any questions on those Hypothetical candles and how to use them, or is anybody actually using them right now to see if they to improve their trading? Because if you don't use them, I would try using them. I think you'll find that it's going to increase your success. All right, now I'm going to take a look at the results that we've had in the options trading room, run through that, and run through some regular trades and what's my SPY super system trades, just so you can see the charts. And we'll talk about the offers we have at the end, which have a really outstanding offer on the SPY super system software today. All right, so in 2023, the trade results using $2,000 per trade in the room produced a profit of a little over $60,000. In 2024, same thing, 2,000 in each trade produced a profit of about $55,000. And the profitability up and down is going to be dependent on the market. Some trades, if you have a trending market, you can stay in longer. If the market's choppy, you got to get out more quickly. So typically it capture profits a little higher, a little more quickly. But that's what we had for those results. Now, this I like to point out. This is kind of indicative of how we trade in the room and how well we do. This was the week that they put the tariffs on, paused the tariffs, took the tariffs on, they put them on, and then paused them. So the market was just going haywire. Lots of retail traders I know actually blew up their accounts during that week and don't trade anymore. And these are people that have been trading a long time. They thought when the tariffs went on, the market was bearish. They loaded up on the shorts. Then they paused them the next day. They got wiped out on the shorts. They went back into longs, and the market went up, and then it pulled right back down again. They got trapped in the longs. They basically got margin calls and got wiped out. Now, we were in 4 trades, only in 4 trades during that week. We were in AVGO, Broadcom, which we entered for $75 a contract and closed for $104 a contract. 39% profit, 2,000 invested at that produced $754 profit. We were in Nike. This was the best one we've had in a couple of years. We were Nike, we were short all of these, by the way. We had puts in all of these. We had Nike, we entered for $285 a contract, and we closed for $9 a contract. All right, 216% profit, 2,000 invested, produced $4,300. This is a big week for us. And then we had Sarepta, where we made 78%, and NNE 25%. We were short all of these. Those are the only 4 trades we had on. Again, we're very selective about our trades, but the SPY was down over 10% in 2 days. And I don't know what our total profit was here, but it was pretty good compared to what the SPY was doing. All right, so this is the current June and July. I just kind of want to bring this up because I'm going to go back over some older results, but this is what we've done. These are all the trades that we've taken in June and July so far. And I was on vacation for almost 2 weeks in June, so we didn't take a lot of trades, but we had 8 winning trades out of 8 in June. And I don't usually have months that I don't have any losses. Generally, I will have some losses, as you'll see in the other results. But this is what we've done in June. This is how we started July. We've had 4 trades in July, all winners. So we've done 12 winning trades in a row. In June, 8 wins, 0 losses. We have 2 open trades still. We have Roblex on, and we have Sarepta on short. But that produced 3,700. July so far, 4 wins, 2 losses. So we've had 12 trades in a row that we've won on. 2,000 invested at each trade, produced $1,820 in profits in 2 days on these 4 trades. 2,000 in each one of these trades produced almost 2,000 bucks. Just VRT, which has been beautiful. STZ, this is the time spread, and then we had this hood was a strangle, I think, and then we did Oracle. All very nice wins. So that's what we've done in June and July so far. And these swings day trades, it depends. It's both, John. Some of these are swing trades. This VRT was a swing trade. This VRT was a swing trade. STZ was a time spread. Time spreads we put on just before earnings. So we put it on the night before they reported, and we took it off the next day. So it was a very quick trade, but it was not considered a day trade. It was a swing trade because it was on overnight. I don't remember all of these. I believe Oracle was actually an intraday trade. This hood was a swing trade. This hood was a swing trade. This coin was a swing trade. JP Morgan was probably a week-long day swing trade that we had. So it's a mixture. It just depends on when we get in and when we get out. But it's one thing I want to emphasize here is when we take a trade in the room or we put it out in an alert, remember, if I'm going along, the daily chart's bullish. So if I close it out before the day's over, and you can't because you're under pattern day trader rules, you can't make another day trade, you can hold it because we have a daily chart that supports this trade. So, and a lot of times I'll take part of my contracts off and leave some of them on. But any trade I put on, other than the SPY Super System 5-minute chart trades that it goes on the indexes, all the trades I take are lined up to be potential swing trades. Okay. All right. So this just going back to January of 2024. I keep all these in here just so you can see what our results are. But the thing I want to focus on here is, and again, we do have losses every month, but the thing I want to focus on here is what to expect for percentage gains. I don't want you to think that I'm one of these people that tell you you're going to get 400 or 500% on every trade. You can't do that consistently. This is the kind of results you're going to see, anywhere from 10% up to 50%. We did have 96 on Boeing, but you can see that the percentages typically run in the 25 to 35% range. All right, that's the kind of percentage gain we're going to be getting. So in January of 2024, we had 20 wins and 2 losses, 90% win rate, 75.05. Now I'll just run through these, but I want you just to see these percentages, how consistent they are. We had a couple of losses here, but again, consistent profits. This was a really good month in February, 92% win rate, 11,745. I think that was for 2,000 invested in each trade. I think that was my best month last year. And the alerted trades, we don't do as many alerted trades as we do in the room, because if the trade's going to be like a half an hour or something in the room, I expect to be in and out. I'm not going to alert on it. Or if I take it like at 350, 345, somewhere late in the day, I'm not going to put it in an alert because it's not fair to the alert members to get them that late. They not going to have time to get into it. So that's why there's fewer trades on the alert service than there is on the room. All right, so there's a February. Here's May. We did a lot of time spreads in May. We had nice win rate. The options room had nice win rate, nice profits. But again, you can see these percentages. A lot of time spreads because this is when earnings were coming out in May. All right, there's June, and the same thing. 86% win rate. We actually made the alert trades made more money that month than the room did, but still pretty nice rate here. July, same kind of thing again. See the percentages? We do have losses each month. We had 4 losses in July, but you can see the percentages. They hang around all the time. August, September, my losing month last year. This is the only month I had a losing month last year. 8 wins, 5 losses, terrible win rate, probably the lowest I've had in 3 years, but only lost $1,700 in the room and only $295 on the alert service. But I just want to be transparent about this. You know, you may have a month or something where you have to take losses. This is the only one I've had in 2 years, but still, there's going to be some. And now it's October. Notice we lost 1786. In October, we made 74.48. A big bounce back here, 17-3. Again, percentages just hanging in there all the way through this. And it's November, same thing. And this was January through March, and I showed you the January through April. I showed you the June and July, I think. So anyway, you can just see the win rates stay around the same, very consistently, 85, 89%, something like that. And the number of trades we take is going to be dependent on the market. I haven't taken a lot of trades in the last month and a half or so. Okay, April 11 wins, only 13 trades, 85% win rate, still $5,400. So pretty nice as far as the record is concerned. All right, and remember what I said earlier on. These trades that we're taking that are generating these kind of profits are being found because I have the SPY Super System software that tells me if institutions are in the trade or not. This is what the alert looks like. Like on Nike, the first alert you would get would tell you, it would be the date. It would say NKE by the April 11th, which is your expiration date. 67 puts, that's your strike, and how much to pay for them. This is the whole alert you would have seen. Then when I decided we wanted to take profits, you would have seen this with a sell order for $9. And then the last one would have been they were sold for $9 on April 3rd. That's what the alert service would look like. So you're getting the stock symbol, the strike price, the expiration date, and the price to pay for the option. Okay. Now, how do we achieve these stunning results? I think I've pretty much covered this already. We're able to identify when institutions are driving a trade and when market internals are heavily bullish or bearish. It tells us whether the institution's in there. We only take trades when both of these are in our favor. Well, especially if the institutions are in our favor. If the market internals are neutral, are in our favor, I'll take it. And it does this, as I said already. SPY Super System software identifies when institutions are creating a trend. Triple screen assessment of momentum, trend. We also do some money flow, but this is the key thing. And I explained to you what momentum really is. We don't have divergence in our momentum. Most oscillators will have they'll have momentum and divergence in it. We don't take, we strip divergence out of there. As far as I'm concerned, it's not useful at all, and I don't use it at all. But that's, we're getting pure momentum on these things. Okay, and again, here's a chart we saw before, just telling us what the SPY Super System software looks like. We've seen this already. You know, also, if you get the SPY Super System software, you're going to get this template, which gives you these 3 indicators here, plus all the other things that we have in here. Or you'll also get another one that you can use. This is for folks that just want to do quick intraday 5-minute trades, like on the SPY Qs, IWM. You're going to get just the current time frame momentum on this particular chart, but everything else is in there, because this is all you're really using for quick trades, 5-minute trades, is this one right here. You're not using these two, using this one. So that we have a template that just has that, just to simplify it. All right, you can see here this how nice this works. You see it's got buying, then you go to some selling, go right back to buying again right here. You take the trade right here, you ride it up for about 5 candles, and then you're out. This is a SPY Super System trade right here. This was on the SPY. I'm on the Q. Sorry. This was this was a reversal here. This is a Heikenatsu reversal. Notice we talked about Heikenatsu. You see how the price is coming along the 15 right here? And there's a Heikenatsu reversal candle right there. Flat top, flat top. This is where you take the trade. Take the trade right there. Notice the institutions are selling, right? They're selling across the board here. We got selling to even higher selling. You take it here and you just ride this thing down. As long as it stays below the 15 EMA right there, that little red line, you're in this trade. That is a beautiful SPY super system trade right there using Heikenatsu candles. Just so you can see that. I do want to just cover the results of the SPY super system for the 5-minute chart trades that we do on the SPYs, the Qs, the IWM, or the futures. These are the results we've had with this thing. This thing is extremely effective. If you know how to find the setups, I have a video on it. I can't alert on them, and I can't even post them in the room. I don't have time, but I can identify them when they're occurring. So all of these results are here are the results that I had for myself, right? Because I can't post these, but these are the results that I've had on the SPY super system. You can see the number of trades can be huge. 56, 6, and 2. You can get a lot of setups. Some days you might get 5 or 6. Some days you don't get any. So it just depends. But it's had very, very good results, as you can see here. It's important to remember with these SPY super system trades, okay, you're only going to have one trade on at a time, and it has to be very short duration, and you have to be willing to sit and watch it because you can't just let these things run. You've got to get in and get out, right? So that's the SPY super system. Here it is, November results, December results. These are really good results. But again, these are my results. I can't tell you that these are the results you get on these. The other ones, the ones in the room that I just posted earlier, the results, those would be, if you follow my trades in the room with the same amount, you would have got the same results, basic. Okay, and again, this October SPY super system results, the SPY super system, which is the 5-minute trades off of the SPY, the Q, the IWM, the futures, produced 4,831 for me, but the room produced 7,448, and this is not included in this. This is a separate strategy, a separate P&L. Doesn't have anything to do with this. This is completely separate. This was the room. See, only 20 trades here. Right here, 37 trades here. Right here is October, November, just so you can see the results we're getting here. Very good results. 9,370, pretty big. December, even better. In the room, 4,500. I only had 17 trades in the room. So this is the last quarter of last year. I just kind of wanted to summarize that for the SPY super system trades, which is the trades that are based on the SPY, the Qs, the IWM, or the futures. This is the results I had. All right, I can't say this is what you would get again. You have to trade these yourself, but you have a video on them, and I teach you how to trade these. And this was the room results here, 17,774. If you followed me or in the room or on the alert service, you would have got roughly the same results right here. All right, so again, these are more SPY super system trades so you can identify how this works. Here's the current time frame momentum. This is what we're interested in for the SPY super system trades, which is trades that only going to last on the 5-minute chart. You're only going to have them on there for 1, 2, 3, maybe 6 or 7 candles. That's it. Right? You notice this went to buying right here. You see how it went from selling to buying. You buy it right there. It's on the VWAP, which is this pink line. Stays above it, rides up. Right there, nice exit. That was a nice profit, $220 per contract. Typically, you're going to see on these SPY super system trades, you're not going to typically get that much per trade. You're typically going to expect to get somewhere between maybe $70 and $150 of contract profits because it chops around a lot. This was actually a pretty nice move. This was just a $90 profit, and this was an in here, out here, right? Boom, boom, in and out, very, very quickly. But again, we're taking it short, goes to yellow, breaks down off of the 15. You take it right there. I get out right here on this when I put in this big tail on this can. There it is again, using the new template, which just shows the current time frame momentum. Right? See yellow right there. Compression breaks down. You take it. I think I actually took it here and get out here. Another nice trade off the new SPY super system template. Just looking at the current time frame momentum. It's bullish. It's bullish. It's bullish. We get this little bearish tinge right here, and then it goes right back up again. So you probably get in right here as it breaks above and gets out there. All right, so just so you can see these, I'm not going to go through too many more of these. I want you to see how the structure is. You can see that the institutions were buying these things and when they're selling. This is a little older template right here because I don't have the momentum down here. I've switched this over to momentum and got rid of this confirmation line. But you can see the profitability here. You can see this breakdown. You see it's red on the current time frame momentum. It's red right here. You get in at the break below the VWAP, volume weighted average price. You stay in it. Then once it moves away, you use the 15 as your stop and ride that down. And right here, you're getting out. As it starts to bounce back up, notice we went from selling, institutions coming back in buying. Another one here, beautiful trade here on the IWM, Russell 2000, goes from red to blue. We're taking it as it breaks out of compression above the VWAP right there. Could have probably taken it right there. I took it right there. And another SPY trade here. Now this SPY trade, you notice this with blue right here, but notice where the arrow went to, where the candlestick went to. It went right to the VWAP. This VWAP right here is resistance, right? We're not going to take it until it breaks through. Then we put it in doji. Here's your buy. Here's your enter on that. It's bullish, but you don't want to try to buy it below the VWAP. You want to wait till it confirms that it broke through the VWAP, which this did. And this is a SPY trade I took. I took the short right here. See how it's red? All red, current time frame momentum red. I take it as it breaks below the VWAP. I get out as I get a green candle right here, and then it goes back to bullish. Institutions are selling, institutions are buying. It breaks above the 15 in the VWAP. I take it long right here and ride this thing up to the pivot point, and then I get out. Right, so that's I trade that short and traded that long. Can the system be used for trading micro futures for intraday trading? Yeah, absolutely, John. You can listen if you can put the symbol in here. Whether if you're using micros, you can just use your micro your micros for your SPY Qs, whatever you're using for it, and it's going to give you a chart for that particular. I mean, the chart for the micros is going to look at the same as the chart for the regular futures, but you're going to get the indicators that for that particular instrument that you're using. You could just trade, you could trade the MES or whatever, but that you want to. But yeah, it works the same. You can use it. A lot of people use it for oil. They use it for gold. They use it for commodities. I mean, it works for commodities as well. And here, so here's some more SPY trades. Again, you can see here we go green here, buying to red selling. It breaks down below the 15. You take it right here and you just ride this thing down. As long as it stays below the 15, you're in it. And here you're going to get out, obviously, with this bounce. All right, so those are all the SPY super system trades. Here's some trades we've taken for swing trades. These are the ones for the room and for the alert service. This was SMR. I showed you this one earlier. Notice we go from yellow to green, selling to buying. As we bounce right up here, we took it right here, made a nice profit in this SMR. I really do like this stock, SMR. And Nike, this is the one we took right here. Actually, got money right here. We took it right here on the 28th. I showed you that one. Well, that was one of the big ones we took. And we held it, and we held it because it noticed it, sell, institutions, sell. And then we get this big move down on the tariffs. So I have a rule that I follow, gaps are gifts. If you're short a stock and it gaps down, that gap is a gift, take the money. If you're long a stock and you get a gap up, take the money. It's a gaps are gifts. A lot of people try to stay in them and think that they're going to keep on going. But typically when a stock gaps, at least initially, it's not going to necessarily keep going. And probability-wise, you're better off to take the profits right then. And there's another reason why. When a stock gaps up or gaps down, the implied volatility in the option premiums gets jacked up. Any kind of gap is going to increase the implied volatility in the option premium, which means your options are going to be worth more than they would be 10 minutes later if the stock moves sideways. All right, even though it was at the same price, the volatility is going to start draining out of it, which means some of the price would probably come down on the options. That's why gaps are gifts. When I get them like that, I'll immediately take them off as soon as the market opens. All right, and there's Sarep. This was another one we had that was short. Again, see how we knew it was short. Look at the institutions selling the heck out of this thing. All right, and this was HIMS. I had this. I didn't really do a good job on this one. I should have got in further back. Notice how it went to green right here. And the VWAP does not count on the daily chart. This is a daily chart. So this is where I took it as it bounced up here. and then I wrote it up, and I get 25% profit. I did leave a runner on, and the thing made a huge run up, and I made 269% on that runner. But I don't post that. I didn't include it in my results. I just wanted to kind of point that out. Right, this is Palantir. This was a beauty right here. Notice selling, yellow, buying right here. Multi-time frame was already buying. We buy it right here. We ride it up, 31% profit in 2 days. Palantir. Lulu, big gap down on earnings. His earnings, big gap down. Selling, selling, selling. Now, we didn't take it. We waited for it to compress. And see this candle right here, where you see where the current time frame momentum's red, but the multi-time frame had switched to blue. There was some institutional buying right there. Then it went to selling. This is where we took it. As soon as it switched to selling, we took it and we wrote it down. We get in at 192 a contract and go out 300 the next morning on Lulu. Amazon, this is a 5-minute chart. This was an intraday trade. This is like taking a SPY super system trade on the SPY or the Qs, but we did it on the stock, right? So it's coming across here, it's compressing on the 15. We're getting mixed signals here on the current time frame momentum. Then we finally go green, and I take it right here, and this pop out of the box, coming out of compression. I take it right here, and we got 32% in 45 minutes on that Amazon move right there. Stayed right green the whole way. ENPH, beautiful short. See the compression, you can see this compression, but it's being sold. So we know that the institutions are selling it. This is a 5-minute chart, so we're interested in current time frame momentum right here. It breaks down right here. We take it right here. We get 20% in an hour on ENPH. Verizon, 50% in an hour, compress. But you know, we knew what they were selling it, right? We wanted to take advantage of the short, but we were looking for the proper entry. So as it broke below the VWAP with a pop out of the box symbol coming out of compression, take it right here, stayed in it for an hour, 50% profit. That was a nice one. I remember that one. We paid $45 a contract for the puts, and we get out for $67 a contract in an hour. And this was a Tesla overnight trade. We can use this to take overnight trades. I took it short because it was, you notice it was yellow and red here, current time frame and multi-time frame momentum were bearish. It broke below the VWAP on the 5-minute, and it was all bearish. So we took it overnight, and we got kind of a lucky break. It dropped from 120 to 112. Nice little move in Tesla. All right, so that kind of, I just wanted to show you enough charts so you can be familiar with this, what the SPY super system looks like and what it does for us. Remember, I said the results that we've had outstanding results in the room and on the alert service. If they're driven by the SPY super system software, all right, very important. And again, here's the strategies. We've talked about this already, all the different strategies we use. Now, for the offer that we've got here for July 4th, this is the normal one for the live trading room and text alert service. But you can get a 2-week free trial. After 2-week trial, if you don't cancel, you get signed up for a quarter, $396 a quarter. So, you know, what that, about $130 a month or something for that. So you get it quarterly when you do this 3-week trial. It rolls over to the quarterly. You can get that. You can cancel anytime if you don't want to. You don't like the room, but you're going to get the text alerts. You're going to get the live trading room. You'll have access to the live trading room. You'll get all my videos. You'll get to see all of the training videos on all the strategies that we use, including SPY super system, including Hypothetical, all the indicators, the 11 most common mistakes traders make. There's a lot of them out there. Now, to get a better deal, you can take the annual access for the trade alerts, the trading room, and you also get, if you do that, you also get into the Discord chat community and the videos. That's $11.96 a year, $1,196 a year. And again, I showed you how much we made last year and how much we made these months. So that's it's a pretty, to me, it's an outstanding deal. And you can do a one-time payment if you don't like to resubscribe for $24.96 for one time. We'll get you into the alert service and the room forever. And again, I'm in there every day, market open to market close. You can ask me all the questions you want. I'll have the SPY super system trade up on the screen all day long. Not the trade, but the software will be up on the screen all day. I'll be switching it over to different charts that people are looking for. I also move my TC2000 charts over there a lot of times to show folks the better technical support and resistance for any of the stocks that they want to take. I do a lot of that, a lot of education in there. And now this is the thing that's really I want to highlight today. The SPY Super System, which is the software, all right? They've got this thing on sale for July 4th for $9.98 for a year, $19.98 for a one-time fee. This gets you in forever. No resubscription. $9.98 if you want to take it for a year, and $19.98 for one time. This is really, really an outstanding offer on the software. I paid more than that when I bought the software a few years ago, but that's really a good price on the software. If you want to be able to learn the SPY Super System and use it, and when you're not in the room, you've got it to look at your own stocks, or if you're looking at futures, you can use it for that. But that also gets you the room. You get the Compass Trading System, which is the SPY Super System. It's going to have a bunch of scanners on it. It also it's going to get all of the videos I did. It's going to be installed right on your software. Rightline will take over your machine, put it right on your Thinkorswim platform, which if you don't have, you can download for free. They'll put it on there for you. It'll look exactly like mine. You'll get any updates that are done to the software or the alerts as time goes by. All right, and you get a month in the trading room, and you get a month of the alert service as well. All right, now if you want to do a one-time payment, this is $19.98 forever on the SPY Super System software. You get the same as you'll get here: scanners, the Compass software with the enhanced information on it that makes it the SPY Super System. You'll get the videos, you get the software installed on your Thinkorswim platform, right? And 3 months in the trading room and 3 months on the alert service for $19.98 for whole like one time, $9.98 for a year. To me, this is like a no-brainer. I mean, this software is such a big help. It's really, really important. So those are the offers that you've got. If you look at the chat box, Rory's got he's got the links in there to the software and the alert and text service and text service. So you can click on those and go directly to it. You can call him at 786-732-4656. Where's the number? Right here, 786-732-4656. You can call him and ask any questions you want. But this is an outstanding deal right here. It really is. This is really, really good. And if you're interested in that at all, this is a good to take advantage of that. And then here's the room. Again, you can get a 2-week trial. 2 weeks not very long. I don't think it's long enough to get you a feel for it, but you can be in there and ask as many questions you want, and you can see what you think about it. You can ask me. I'm trying to be very transparent about all the stuff that I do. Again, as I said at the beginning of this, I'm not a professional presenter. I'm not a professional marketer. I'm a professional trader. I just trade, and I'm trying to share the information that I know works because I've been using it for years with other folks. Because I know I had a mentor when I first started, and I know it's a big help to talk to somebody or work with somebody who's gone through a lot of these things. Because I've made every mistake in the book when I was learning how to trade. So I'm trying to help folks maybe get around that. So again, thanks very much for coming to the webinar today. I really appreciate it for giving up some of your holiday weekend to come in here. Thank you so much. Look forward to having some folks back in the room on Monday, back in the alert service. And I seriously think about getting that software. I mean, listen, if you're gonna be successful trading, it's like anything. You've got to invest in yourself. You got to invest in the proper tools. There's a lot of crap tools out there, but I would highly suggest the SPY Super System. Just like for anybody who's really wants to do outstanding charting and scanning, I suggest GC2000. But that's neither here nor there. But anyway, there's your deals. These are really, really good offers, and so take advantage of them if you want. And hopefully, I'll see some of you folks back in the room on Monday. All right, have a good weekend, everybody. Enjoy the long 4th of July weekend, and we'll be back to trading again on Monday. Have a good one.